Hello, active traders, and happy holidays. I'm Ken Calhoun from TradeMastery.com with another episode of our Trading Week Ahead broadcast. We've got spectacular volatility in our current markets to work with, and we're going to be taking a look at least how I'm planning to capitalize on that this upcoming week ahead in this week's episode of Trading Week Ahead. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by what's insecure to not make actual trades. It's all for educational use only. I've been actively trading over 1,000 trades in the last couple of months in October, November, hundreds more the last several weeks here in December as well. Hey, before we get started, just a reminder, I've got a best deal of the year for my live Trading the Open Room. Since the year 2000, the Trader's Room of Choice, I trade my Fidelity account live in front of everybody 5 days a week, Monday through Friday. And you can get a 6-month access pass for only $4.95 at this link here, good through Christmas Day. The deal ends on Christmas. So tradingtheopen.com/subscribe, $4.95. That gets you access, including video downloads and live market training with me every single day with actual real money trades I'm doing. So really spectacular way to learn. Anyway, let's get on with it. Our S&P is down, finally broke that critical 2,600 level again on Friday. Looks like the bears are in charge. We've got the Fed coming out. The FOMC is this Wednesday at 2 p.m. Eastern, and that's going to be a market-moving event. Much less important, we have a potential government shutdown Friday. I don't think anyone cares about that, but the FOMC on Wednesday expected to move the market sharply one way or the other, and so we'll be looking at how that works in our current markets as well. Also, I will be day trading live my account with both TVIX and TQQQ, two of the different ETFs or ETNs that I trade every single day in that session as well. I'm going to be reopening the room up for the FOMC on Wednesday, so I'll be trading it live. Anyway, so what's the market going to do? Well, it looks like it's going down. Are we going to get a tax loss sell-off, or are we going to get a Santa Claus rally? I think probably somewhere in between. We'll likely get a couple of small bullish trap bounces along the way. Ultimately, I'm still a bear and have been since early October when I told everybody that I was shorting the market by going long in the inverse ETFs back here when we lost the 50 SMA. Now that we have a death cross firmly entrenched here December 4th, that's a confirmation that the bears are in charge. So what do we want to look for in our trading setups? Well, of course, I like to trade the inverse ETFs. But let me give you a couple of bottom fishers that I've traded recently. DGAZ is one of them. DGAZ. I sold it Friday. I was in just small shares. And the reason is it gapped up nice in my favor. It turns out I sold too soon. I sold it, I think it was 73.7 right into the pullback. I had been holding overnight. Really nice big gap though, and that's why, because it's a sell the rallies market, right? So I sold here a little too soon as it turns out. I want to see if this guy keeps climbing up over 80. And the other bounce play is UWT to play the bounce in crude. And it's been going up and down lately. If we take a look at the daily chart in UWT, you can also get the same chart in a variety of other instruments like UCO and USO, but I like the point range for bottom fish. Notice please a bullish engulfing here. That's a key candlestick reversal pattern near the bottom in this congestion or consolidation range. I'm most interested in this guy if it breaks over 1630, 1650. That's kind of my line in the sand is 16.3. So if we bounce over that, I'll start putting on some size. In the meantime, I've been kind of fishing around, bottom fishing here to see if we get a bounce, and this is the way to play the bounce in crude moving forward. Now, in the meantime, I want you to take a look at some of these inverse ETFs. These are instruments that I like to trade and have been for many, many a year. And my favorite one, of course, is TVIX, playing the VIX for volatility plays. It goes up when the market sells off. Another favorite is TZA. It has a nice, clean uptrend breakout chart as well. And these all go up sharply when the stock market sells off. Now, I covered these for my Swing Scans members and many others on Saturday, and I cover these daily in the live trading room for all of my members. So do be sure to join tradingtheopen.com if you're a day trader, and Swing Scans if you're a swing trader, or many traders are in both. So whatever type of trader you are, I've got you covered. Let's take a look at some of these charts, just briefly. If you go through the inverses, you go through these patterns, see you've got some really spectacular volatility. The ERY, the energy bear triple, is up nicely too. Note to self, I should be trading. This one I have not been trading lately. I've been trading TVIX, I've traded QID, like TZA. I'm also trading the S triple Qs. I'm currently long that one, and more. Anyway, the point is, do be on the lookout. Historically, I've always traded the VXX, which is also a spectacular instrument to trade when the instruments, and I'm currently long just 50 shares this one. I'll be scaling in if it keeps going up as well. Anyway, plenty of trading opportunities are up ahead for us. Excuse me, in today's markets. From a volatility trading standpoint, instruments with big ranges are the way to go. And by that I mean big point ranges. TVIX has been kind of quiet the last couple of days, but it's got a range of up to 4 to 6 points daily. When you look at these patterns, when the general public is told about the defensive plays in utility and healthcare stocks, which is probably a pretty stupid thing to do, I like to trade, as do most professionals, the inverse ETFs that go up when the stock market goes down. What an amazing idea. That's what I specialize in. So I've been trading these, I've even day traded these back during the original flash crash day many years ago successfully, just like I made over $1,000 in my TVIX trade a week ago, Tuesday before last, when it spiked up. It's got especially good volatility. Let's wrap up by taking a look at this, because this is an instrument I cover every single day and trade every single day in the live room. You may ask why I'm looking at this chart, but if we pull back just a bit here to more trading days, you'll see why it's so appealing. So now this is TVIX. This is the day I made $1,000, just over $1,000. I started off with small 50-share trades, scaled in. You can see my Twitter feed for P&L proof for my Fidelity SEP, and I sold at 45.24 on 250 of the 300 shares, and sold the other 50 shares just about a point down from that. Anyway, look at all those points of range. So when this thing runs, it has plenty of range or movement to it and plenty of volatility. So TVIX is a really good instrument to play for intraday trades. Also good for swing trades if the market continues to sell off. The reason, as always, for all of these inverse instruments is because not only the one-year chart, if we do take out those early February lows, there's so much upside potential in these guys when they run for either swing or day trades. They got plenty of trading range. So anyways, that's what I'll be trading primarily moving forward to capitalize on the volatility, as I have since early October, right? And we'll continue to do so. So anyways, best wishes for success in your trades. Focus on, or at least I'm focusing on the inverse ETFs. Strategy note, it's a swing. When you're swing trading our current markets, it's either overnight holds or up to 3 or 4 days round trips on the maximum. Intraday trades, I like primarily no more than, say, 15 or 20 minute round trips. I like to play things relatively quickly, which we need to do in our current markets because they're very up and down and very speculative, very treacherous markets if you're on the wrong side of things. So instead of the talking heads talking about, it's a inverted yield curve and trade wars with China and all that kind of crap, all I care about is making money for short-term hit and run trades that actually have potential to do very well for us. So I do urge you to consider joining me at Trading Open. I've ran the live room since the year 2000, trusted by thousands of traders over the years, and I certainly appreciate the opportunity to be of service. This is my best deal. You get to work with me 5 days a week from 9 a.m. till 10:30 or so each day, 5 days a week, and I trade in front of you live with my Fidelity account, and I show it to you too, the actual trade confirmations when they come in, whether I take stops or wins or break evens. I do some of all, and I share it with you with complete transparency. So I hope to see you in the live room, and I wanted to wish you all the very best for a happy and safe holiday season and a profitable upcoming trading year ahead. Bye for now.